I have a friend who earns 60K a year,
Wow.
but because of the way, and he lives at home,
Okay.
but because of the way he supports his family and stuff, he can't save as much as he would wish to save, and that's quite a unique scenario. But he can't be the only one. You know, there's people who have maybe moved out of their houses, and like we've said previously, they might not have the ability to save as much because they're paying rent or they're paying for a room somewhere. So it's going to really help people who are on high incomes who actually could afford the mortgage payments but can't save. It's going to give them that chance to say, right, I'm going to step onto the property ladder without a deposit, paying maybe the same that I was paying for rent or even less for a property, depending on where you live. So I thought for me, that's the biggest pro. It is going to leverage a lot of people onto the property ladder that are going to be able to buy that maybe couldn't buy before. So, and what kind of goes hand in hand with that? And it's hard for us, even in this conversation, because we don't know what their criteria is.
Yeah, I'm really interested to see when that comes out. You know, everybody's going to be talking about it, and
because even with, I think it was last week Monday, the Bank of England released that they're looking to scrap affordability checks. Now,
what?
Yeah, like if anyone wants, I think it's either Daily Mail or one of these.
I don't understand.
Publications.
What, when we're going into a recession, are they all right? We're not leaving the recession. We're going in.
Yeah. So just for those that are listening, the affordability checks on the mortgage, they would usually use a stress rate. And what a stress rate is that they would say, right, Ato's interest rate on his mortgage is 1.5. We're going to do a calculation on a rate of 4.5 to see if in the event that interest rates went up by 3%, can Ato still afford to pay this mortgage? Then it all goes through. They look through your income, your outgoings. They might do like a debt to income ratio. These are all the sort of things that go into a mortgage application, which you would have gone through when you made your purchase. So it's like, for them to get rid of that, it kind of makes me think, so what's going to happen then? Because how are they going to vet lending someone 100% of what a property is worth? Because what I think is going to happen, I think that a bulk of these applications will be people taking out the 100K mortgage and trying to rent the property out on the sly. Honestly, I said it to my sister yesterday. I was like, people are going to try and make a buck off this. Like, people are going to say, right, I've got the property now, put some tenants in, or I have a lodger, make some money on the side, because it's like you haven't had to actually invest any of your cash into it.
That's
You're
true.
still able to get the property.
That is true.
So there's so many ways this could go, but without knowing the criteria, I would just advise everyone to just be on the lookout for what exactly the criteria is when it does come out.
Yeah.
Because until we get that, it's going to be hard to even say whether it's a good idea for some people or not.